Hey, it's Mike, and today I want to talk about one of the hottest stocks around over the past 5 trading days, and that's Ideanomics. The stock was at 124 before rising all the way up to almost $4 before coming back down to 271. The stock was down almost 14% on Wednesday, down to 271 right now, rose a little bit in after hours. So the question is this a stock that you want to get into? And I would say that the answer is most definitely yes, if you're able to ride the volatility. Currently, Ideanomics 50-day moving average is 96 cents. So my rule of thumb is any stock that rises quickly and then pulls back but remains above its 50-day moving average is most definitely a buy, as long as that stock you're aware of where the 50-day moving average is and you're willing to be able to own that price above the 50-day moving average. So if you buy at 271, you have to be willing to hold this stock if it goes all the way down towards 96 cents or that $1 level, because that's where the 50-day moving average is. If it is, I do think you have the potential to get some excellent gains. So what is Ideanomics? Ideanomics is in a very, very interesting space. Basically, they're a fintech company that's helping like commercial entities build out their EV fleets. So they're essentially an EV play, but from a fintech angle. And I talked about this in a previous video that Ideanomics is basically like a picks and shovels company where they're not making electric vehicles, but they're financing companies that want to buy fleets of electric vehicles. And I talked about how the picks and shovels companies tend to be the ones that get rich, while a lot of the EV companies will eventually fail or merge. And then you have some that become big successes like Tesla. It's these companies that sort of support the emerging industry that usually end up coming out on top because they're able to manage their risks better. I mean, the real risk is they loan out money to people who want to buy EV fleets. As long as they practice proper risk management and they're not making a bunch of irresponsible loans, they will most definitely make money because every commercial business is going to have to switch over to EV fleets. So this is something that is going to have a huge demand. Now, of course, when you have a stock that rises from $1 to $4, you're going to get a pullback. So this is to be expected. You know, when you see these pullbacks, you also have to check, is there any bad news coming from the company? If there's no bad news, then chances are, this is just people who are just taking their short selling, their profit taking opportunity. And this is a great chance to get in. But like I said, if you do buy at 271, be aware that this stock could go as far down as like 96 cents to $1. And then still keep going up. So just be aware that's your downside potential. But this is definitely a stock that you'll want to take a look at. The market cap is pretty low at $647 million. And I definitely think they have the potential to move much higher as many more companies decide to, well, not decide, but they're kind of forced to switch over their fleet to EV vehicles. So Ideanomics trades on the NASDAQ under IDEX. I hope you enjoyed this video. If you did, please be sure to like the video and go ahead and subscribe and turn on notifications. I do multiple updates on stocks, options, and stock trading strategies. Okay, thanks a lot. Bye.